Most people think life insurance is for young families with kids and a mortgage. But what if I told you some of the wealthiest, most financially savvy seniors are still buying policies after 65? And they use them as tools for legacy, leverage, and liquidity. That's right. Today we're going to challenge the mainstream advice, explore the facts, and ask the real question. Is life insurance after 65 a waste or a wealth strategy in disguise? Let's get into it. So thank you so much for tuning into this episode of the Banking Bros podcast. I'm Jonah. Jay Do here. And today we are tackling this idea of, am I too old for life insurance? And not only are we going to talk about it and share our insights, but we've got an article that was recently put out, Jeremiah, by CBS News that tackled this exact thing also. So we'll show the article. We'll dive into some of the sections that they talk about. We'll give our opinions on it. And then, of course, we'll leave you with something that you should consider back at your home, your car, that you should think about as we kind of go through it. So before we get into it all, we have a new studio.
We do. Yeah, it's fun.
So if you are not looking at us in the face, in the flesh right now, we'll check you out on our YouTube channel where you can see we're in the same studio, but it's a new studio. New to you.
Yeah.
New to us.
We got different angles. We can go right here or we can go right there.
Okay.
Or sometimes we can go up to the sky.
All right. So shout out to our production team and Rich, who came down, Rich Fuchs and Sven. They probably are not subscribers yet, but
they should be.
They should be, and we appreciate you guys so much. So we got a new look and feel in here, and we're mashing some crazy buttons.
Yep.
All right. So subscribe to us over there on the YouTube channel or our podcast normal channels if you're listening to us. We're still here, and we're ready to tackle the save and spend system. And we're talking about in your golden years, your desirement years.
That's it.
Right? Not retirement, desirement. Let's put a punctuation mark that is an exclamation at the end of your life by adding life insurance at 65. Jonah, what are the people saying?
Yeah, so let me show you guys this article here really fast. This is the article that we're going to be diving into. It's the CBS News article that talks all about is buying life insurance after 65 worth it, basically.
Okay.
So I'll scroll through here and we'll kind of stop right away. There's also ads in here. Don't worry about that. That's how all articles are these days. Almost tripped up getting through that. But the first thing they talked about is open enrollment season.
Yep. Which is right now. The article is like a week old.
Yeah.
This is now. We are recording this November 2025.
That's right. So it says, here's what the article says. First paragraph, with open enrollment season underway, many seniors now find themselves combing through their Medicare supplemental and health insurance options. Most people are going through their health insurance options right now. Finding the right policy now can both improve your coverage options and potentially save significant sums of money. So it's worth shopping around to find the right cost-effective policy for your needs. What do you think about that, Jeremiah?
I agree. I think that your insurance options and your financial options should be reviewed annually and to see what has changed. But this is so much more than insurance options and things like that. But because of open enrollment and the fact that we're getting into the holiday season, I think this is a great time for that. So I'm agreeing with this. Let's take a look at everything. You're going to run into the family several more times for Christmas programs for the kids.
And hopefully it's not running in this way.
No, right. Okay. Yeah, hopefully it's not a fight with the family. Hopefully it's a financial family reunion. Remember, we host those, and we can help facilitate those conversations. So this is a great time. You're going to see family 3 or 4 more times before the end of the year. You're going to be able to have some downtime with them where you're going to be playing football in the yard on Thanksgiving Day, or you're going to be, just cleaning up wrapping paper trash.
That's it.
All that type of stuff. So this is a perfect time for it. At the end of the year, we've got to assess the situation. So I think it's great.
Yeah, so I would absolutely stand by what you said. Because of open enrollment and because of health insurance premiums and costs and plans, and they force you into looking at your health insurance basically at the end of each year, I think it is a great time to review all of them. If you're going to have to review one, you might as well get in that state of mind and just review them all at the end of the year. So that's our recommendation to you if you're at home listening or watching. Because they're going to force you into reviewing the health insurance premiums, you should review all your insurance.
And it's a great time, come to think of it, it's a great time to be able to get ahead of this
new year, new you game.
Yep.
And your resolutions, your goals, if you're that type of person, or you realize, man, I really have a couple extra pounds on me still. I don't have the money saved or invested well. This is the time to think about it, so you can be, ripping and rolling by January 1.
Yeah. Now, if you've been paying attention to our channel, listen to us any, we like to talk more about the financial, the cash flowing aspect of some insurance policies. But this is not to say that you should not review the others. I've recently, even not because of open enrollment, I was doing it just prior, but I've reviewed a few other insurances and saved a bunch of money, actually, or found some new coverage that was really helpful to have. So get this, I'll tell you, because we both use the same insurance carrier for our car insurance.
We do?
Yeah. So I went on their website and I started looking at some other insurances that they offered.
Okay.
And I found a jewelry protection plan.
Oh, I had one.
Okay, so I had one too where I insured one specific piece of jewelry.
As did I.
Okay, so I changed that. It went from $20 a year or something to $25 a year. So it's very inexpensive, but it did cost me $5 more.
Okay.
But now every piece of jewelry in my house is insured. No, and it's a blanket plan. You don't even have to turn in what it is that's insured. You just have to prove that at one point you had it.
Love that.
And everything's covered up to $2,500, including Apple Watches.
Look at that.
And that was actually like, oh, well, I'm going to do that then. Because
that's a gem, not just a jewel.
You know what I mean? And then
of a policy.
So anyway, I mean, just reviewing it, right? Read the fine print, look at them. So anyway,
okay, but we're not 65.
Yeah.
So back to the people
life,
that had.
right?
Okay, here we go. So here's some misconceptions about life insurance. Okay, the main two, and we do cash consultations weekly with multiple people all across the country. Number one, it's too expensive and I'm too old.
Yep.
That's what you're going to hear from people like crazy. Because premiums go up as you age, oh man, I can't afford that anymore. It's no longer interesting to even consider at my age or at my health.
That's it.
Now, I want to know your thoughts on that.
Yeah. Well, I mean, I'll tell you what the article says here. I'll put it back up on the screen. It says, it's kind of similar to what we said. It says, savvy seniors may want to use this open enrollment period as a starting point to review all their insurance protections overall, which is what we said. We think that, which means taking a second look at life insurance. So this article is really positioned for a 65-year-old that doesn't have any life insurance, which if you're 60, 65, that age, and you don't have life insurance, most people who are 65 and older realize what a mistake it was not to have it.
Yes, that's true. And the other thing that people jump in and think at this point in life is, whoa, my term coverage is about to go out or just went out.
Yep.
At this age.
Yep.
Yep.
So here's what the article says and what I'll get back to here. It basically is saying, second paragraph right at the top, with multiple types of life insurance to choose from, you've got to weigh the factors, right? Life insurance isn't normally a hasty purchase. It said people over 65 need to consider what it's covering, how much it costs, how it fits into their overall budget. And the reason that I'm going to agree with that, Jeremiah, is because when you're normally over 65, your health has significantly declined.
It's starting to slow down.
Right? Generally speaking, that's going to happen around like 50, 55. Your health starts to come down. And when your health starts to come down, life insurance premiums can increase. So it really depends on what you're trying to solve with the life insurance premiums.
So that's another thing. Right. Most people out there, not who watch our channel, they're starting to pick up on it, but most people don't realize there are multiple things and problems and challenges you can solve with life insurance.
Yep.
Because these policies can potentially pay throughout your living years, or you can use the money for other things that have nothing to do with your health or age.
That's right.
So because of that, we have to take a look at this. And I think at this point in life, 65, the kids are now out of the house.
Yep.
You start to realize, man, well, I was busy taking care of my family and working. I'm only working part-time now, half-time, or maybe I'm actually retired. And now I need the money to be working, not just me.
Yep.
And I think, like you, most people needed to have that conversation and a coach at 40, at 30, so they're not realizing it for the very first time at 65. But there are many people, that's where we're going to start.
Yeah, I've talked to a few people in the last couple weeks who are starting to realize certain aspects about their life insurance, retirement, cash flow, income around this age. And it's when they start to realize it, you talk to them and they start to say things like, well, now that I realized that I should have paid attention earlier. Right?
Sure.
I mean, that's literally
Yeah.
the bottom line, the
Yeah.
read between the lines message that you're getting.
Huh.
Now that
Yes.
I realize, whoops, I was supposed to actually do this a lot earlier.
Yeah, at
you know?
30, at 40. But my expenses were high. My time to look into this was actually low. So let's go back to the first recommendation. Ladies and gents, go ahead and review your stuff. And if you need a coach that's competent to consult you through this process, we'll do it with you.
Yep.
We'll be happy to help.
So I think one of the things that you can solve with life insurance, is you can solve your final expenses. We've talked about
course.
that before on the show. Right now in South Carolina, I think it was like 15, somewhere between 10 and 15 grand just to be buried.
So
in South Carolina.
I went to a funeral home event
Okay.
6 weeks ago or so, and it's more expensive than you think.
Oh,
They have
okay.
I may have mentioned this on a previous episode, but there is a questionnaire at a large fifth gen funeral home. Funeral homes are like,
Yeah, they
that's a
stay in the
family
family.
business.
Yeah,
That's
they
a
stay in the
family
family
business.
for a long time.
Okay,
Right.
so this group in the southeast where we live, 5 gen, the dude got up there and said, I'm round 5.
That's crazy.
Yeah, I mean,
Yeah.
he was as old as me. He was like, I'm round 5. And, because they've been having these plots all over town at every other church or wherever, I don't know,
Yep.
since 1903. And he said there's a questionnaire that they'll take you through
When someone passes,
before someone passes if you
someone-
want,
okay.
because they can pre-plan it.
okay.
They do either way.
Yep.
And it's 100 questions.
Whoa.
100 questions.
100 questions. That is a lot of questions.
Yeah.
It didn't seem like it was that. Okay, that's a lot.
Yeah.
I could probably only think of 15
Yeah,
questions
correct.
right now.
And that would be a
Right.
stretch. He's like, there are a lot of different things
Yeah, that's
going
crazy.
on. Yeah.
So final expense, you've got to plan for that ahead of time, right?
Okay.
You
Yes.
can also solve with life insurance. You can solve estate equalization. Then now again, generally you're going to think about that if you've got a few dollars or you've got a few assets that you're going to pass
or
on,
a few dependents.
right? But I talked to a young lady. She is 78 years old. Her brother passed away. Her brother left her a IRA, which was a traditional IRA, so she has to pay the taxes. Her brother left her his house.
Mm-hmm.
So
It's trying to be a blessing.
house is in probate. She's drawing on the IRA to pay the probate lawyers. She has to pay taxes every time she draws the IRA, but her brother left her no money, no life insurance. And when she got on my phone, she said, I'm 78. I live with my son, who's 50.
Right.
I need life insurance because I don't have any. My brother just left me stuff, no money. I cannot do that to my kid.
Yes.
I have 3
Ooh.
rental properties, about to be 4 when I get my brother's house.
Yep.
I'm doing fine financially, but I don't have any life insurance. If I'm going to leave 4 properties to my son,
He needs cash.
he needs cash.
Yeah, not in probate.
Yeah.
He needs tax-free cash.
So her 2 things, I need life insurance because I need to leave him cash, and I need a trusted estate planning
Right.
lawyer. That's what I need.
We can
Because
help
I'm
with
going
that.
through it, and I need to make sure that he doesn't have to.
Yeah,
right?
isn't that interesting? Because there's so many things that we want to do to give our next gen a leg up. It might be a sister, a brother, a sibling, and your children. And turns out we actually had the right thought and we had the improper structure.
Yep.
Improper structure, because now I'm in trouble because it's draining all my funds. You need to leave me money as well.
Yep.
That's interesting. That's the whole reason. So let me give you a younger person's perspective. I was on the call with someone this week, and he's got 2 dependents. They are still minors. He wants to get whole life insurance
Okay.
for this infinite banking concept idea, and he wants to leave them. I asked him who the beneficiaries were. Okay, if I'm getting this policy beneficiary, he said, and it better not be your 16-year-old. He's like, oh, I can't leave it to my kid. First off, let's think about this. You cannot leave money, cash, to a minor. That's not a thing.
Yep.
Everybody out there who goes, oh, that means, okay, financial 101. You can't leave money. A 12-year-old cannot call an insurance company to get a check.
Yep.
You have to be
For $1
18.
million bucks.
Yeah.
It's not
Well,
happening, right?
and number 2 is, what are you thinking? You can't leave a 16-year-old $1 million.
Right.
That would be in the opposite end of the age spectrum that you just talked about. You can't leave $1 million to a 16-year-old. You have to tell them what to do with it.
Yep.
You have to put it in certain positions and put them in a position to be educated. If I die and leave my car, that's a piece of property that I'd want to leave to my family members. If I want to leave a car, I have a nice car to my 11-year-old, I can't hand her the keys. She's 11. You have to put things in place, people. Okay,
right.
there we go.
Right. So there's also tax-free inheritance. We talked about just a little bit. You can solve that with life insurance. Right now, the way that my family is set up, I'm married. I've got 3 small children, 7, 5, and 2. A tax-free inheritance is important to me currently, but it's actually for my spouse more than anything. If I were to go, I need to make sure that my spouse does not have to go get a job tomorrow. Does that make sense? She's got little kids to take care of. She's at home. She's a stay-at-home mom. She takes care of the kids. She helps out with
And she used to work at the grocery store.
kindergarten.
And
she
she
helps
used
out
to.
with, exactly.
And it was a terrible job.
Like,
for
what
her.
are we doing, right? And you can also solve your long-term care alternatives. Now, we talked earlier, if you're 65, your kids are normally out of the house. And that is true, except for if you've got any kids with special needs. If you got kids with special needs, those kids are in the house. And you've got kids with special needs, and they're in the house, and you do not carry life insurance, honestly, a little bit shame on you. What is your special needs child going to do when you go and there's no funds, especially in something like long-term care, this hospital, assisted living,
Disabilities.
nursing, disability care, right? Does that make sense?
So I
You
think
can
a lot,
solve that
I
with
would
life
assume
insurance.
that a lot of people have thought through this before, Jonah, but of course, make an assumption, you know what that does.
Yep.
And I'm
Makes
working
a
with
fool.
I'm working with somebody right now who is a mother of a special needs son who, according
Is
to
taking care of it? Working with
yeah,
us? Taking
right
care of
now
it,
she's
right?
taking
I
care of
love
it because
Yep.
she realizes like, well, I mean, sooner or later I'm going to have to go. I will probably predecease him.
Yep.
And he will always need support.
That's right.
Always need support. He's not an independent person in terms of his living situation, and I don't think he'll ever be, according to what I understand. So, there we go. So those are some things that life insurance will solve, and your age doesn't care about those things.
Sure doesn't.
Okay, now life insurance. Go back to the article.
So you're going to love this. Yeah, I'm going to go back to the article really fast. So right at the bottom of the screen here, for those who are watching, I'll read it to you. This is interesting because we talked about this in the last 2 podcasts. It says it can cover a variety of expenses and needs. That's important. But then it starts with saying, with many seniors reliant upon strict budgets made up of Social Security, retirement savings, and possibly pensions. I want to stop there for just a quick second and talk about that, and here's the reason. In an episode that we recently put out, so go back and listen to our old episodes if you haven't, we talked about how Social Security actually makes up the majority of retirees' budget. It's actually the biggest line item in your budget, Social Security. We talked about that recently.
Income item.
Right? Income
Yeah,
item.
of course.
Then we talked about pensions.
Which
We
I
talked
had no
about-
idea of. I was shooketh.
And the most you can get is $5,100. We also did a podcast episode on that. I talked to a gentleman yesterday who said, I'm getting my Social Security at 67. I will not wait until I'm 70 years old for the full Social Security, because if you don't know, they don't give it to you all unless you're full retirement age. It's a whole calculation they do. You can get onto ssa.gov and look it up yourself, or you can go back and listen to our last episode and we'll walk you through it. But he says, I'm taking it at 67, not waiting to 70. It's a $800 difference if I wait 3 years, but I need the money.
Yeah.
And I said, okay, how much are you getting from Social Security? $1,900. And I thought, man. But if now that I know the calculation based on our last episode of how you actually get the max Social Security, $5,100,
Right.
then it makes sense to me. Of course, it's only $1,900.
Yeah.
Like, you've got to go, and again, I won't go into the last episode. You can get it. But here's the key. We also says, so it says Social Security. It says retirement savings, which is very interesting to me that it says retirement savings, because your 401k and your IRA are retirement investments. But I bet they're mixing the words, right? And then it says pensions, which we talked about in another podcast episode, how to go get a private pension, which is an annuity, right? Which you get from insurance carriers, insurance. So it's funny, and it says it may seem counterintuitive to add another premium into the mix, but it's not very counterintuitive if you add the premium into the mix, life insurance, that can be used for the infinite banking concept. Because then that life insurance premium will earn for you while at the same time you have cash value in order to use, which is why we call that process sometimes our save and spend system, right? How you can save your money and you can spend someone else's. So I thought that was very, very, very interesting. It also talks in this article a little bit about using your life insurance as a cash reserve, right? Which is something that I really liked as well. I'll read it. While it may require larger upfront costs and it may take a bit more time to build than term insurance, whole life insurance can be worth considering. This type of insurance lasts for the entirety of a person's life, and it comes with a cash component that may be leveraged while the person is still alive. CBS News. published October 29th, right? This is common information. It just might not have been common for you.
We're trying to tell you.
Right? It is an attractive feature during any economic period, but especially so now, while many seniors find themselves in extra need of financing. Still, it takes time to build up whole life insurance reserves, and it may not be achievable for those considering life insurance in their 60s or 70s, but is worth evaluating to determine where it may or may not fit into your overall financial picture. Jeremiah, what do you have to say about it may take time to build up whole life insurance reserves?
A couple things about that. We do custom contracts around here. So our contracts, 9 times out of 10. The reason I don't say 100% of the time is because, one, it may not be what you want, but more often, based on your age, we may be customizing things for a long-term custom picture for you where there is little cash at the beginning, maybe not as much as you'd want or even need, but there will be cash reserves.
Yep.
So here it is. May is depending on what type of life insurance you have. Notice, and I always do this, notice that in the article, if you saw it on the screen, and we'll say it again, whole life insurance. There's 80% of the people listening to me just thought I said universal.
Yep.
Whole is a proper noun in life insurance. Universal is a proper noun.
W-H-O-L-E.
And those are different types of life insurance. Also, we're going to customize the contract for cash to be available from the jump, as we might say, within 30 days. So we are talking about a specific type. We set them up the Nelson Nash Institute way for the infinite banking concept. And if you are of age, 65 plus, there may be slightly less cash to use for the longevity play because your age is one of the factors. We take your age, we take how much money you want to put in, we take your health, all of those things the insurance company is interested in to make sure you have cash to use right away.
That's it.
Okay.
Right? And once you have cash to use right away, there's so many things that you can actually do with it. We've partnered with a couple of cool people recently that have different ideas, different private strategies, different investing techniques on what you can do with your cash. And we've got a quick message from one of those partners.
Who taught you about money? If you're like most people, the answer is nobody. But something has changed. You have tapped into the resources of the Banking Bros, and you are learning the tools that nobody else talks about. I'm Tracy Bell, CPA, financial educator, and founder of Prevail. I specialize in helping people like you find smarter ways to grow your wealth. Now that you have a policy, let me introduce you to another tool called private money lending, the next step in thinking out of the box. You've probably heard of REITs and real estate syndications, but here's the difference. With private money lending, you're not just an investor, you're the banker. With this strategy, you lend money to real estate developers, and in return, you earn fixed interest income backed by collateral. It's contractual and predictable and completely passive. Imagine earning double-digit returns while you sleep. No property management, no headaches, just steady interest income paid directly to you. At Prevail, we are here to share opportunities outside of the stock market that put you in charge of your money. Let me show you how to leverage the cash in your policy, in your retirement account, or even in your savings account. And then, your next question might be, what else can you teach me? Check the description for my calendar link, and let's schedule a time to talk. And get ready, because there's more to learn about money.
All right. And quick shout out before we jump back into the episode to one of our fan follows this week. And that's Jeremiah Hollingsworth over on YouTube. And I can't see his handle.
I can't need it. 227
something.
227. So that was my show back in the day.
227 was the show?
For a guy who lives at an address, 227.
Yes, I do.
I'm probably not supposed to say that live, but you don't know that was a show?
Actually, I think
I've told you this
mother
before.
told me. Somebody told me.
227.
Okay, cool. Anyway, Jeremiah Hollingsworth, thanks so much for subscribing over on YouTube. We're going to tag you in the description of this episode. If you're interested in Prevail, one of our partners on where to use cash value and how to invest a little bit uniquely. I guess they call it alternative investing.
Yeah. Shout out to
you should give us a comment. But if you're also thinking about owning, controlling life insurance for financial leverage and legacy, you can do that as well. There's going to be a link in the description of this video. You can click that link. You can book a call with us. We'd be more than happy to talk to you. Or if you're not ready yet, leave us a comment, ask a question, and we'll jump in and we'll make sure we answer it for you.
So I want to talk about this policy being private for a senior who is now in the stage of getting close to required minimum distributions. Okay, that's going to start at 70 plus and things like that for most people. Also with market risk, also with taxableness as they pull things out. We are talking about utilizing life insurance, which is under an umbrella of private.
That's it.
Non-taxable, depending on the way you want to use it. So this is huge. The IRS is not your friend. They've never been your friend. They're a collection agency, and there's nothing to collect when we're utilizing life insurance after 65, before 65, when you die, when we utilize it for our family, when we borrow against it, rather than always taking out money that withdrawals and things like that, or taking all the dividends home. There's several options there, but I think that's a huge thing that people need to understand. If you decided to play the life insurance game, you called it alternative a second ago. We were talking about investments.
I did.
But alternative, these are private.
Yep.
There's nothing to report. There's no lines to have to fill out on April 15th. So that's a huge deal.
It's a huge deal, especially when the tax man comes knocking around 65. If you've used a 401k as your primary retirement funding, if you've got traditional IRAs, if you've inherited, they say that the inherited IRA and fund is going to be huge in the next 10 years.
Oh, tons of people.
Because all the boomers saved up. And again, if you pass early, pass on time, more than likely you're going to have some money left over, which means it's going to pass. And as soon as you get it, now these are 40s and 50-year-olds basically who are going to inherit this money, and then they're inheriting a tax liability also.
Isn't that crazy? Because most families out there, shout out if your family's not one of these, but we'd love to know in the comments if you have a traditional mindset family around finances, a traditional family financial mindset, because some of these families out there have this money. It's sitting in piles.
Yep.
It's in these accounts, but their parents still won't talk to them about it.
Yeah, it's crazy.
They won't say anything.
Knowing they're going to get it and pass it, and
They're like, I don't know how to deal with the fact that, because some people coming of age like we are, of course, we are very aware there ain't much money coming our way, but we can ask and we can have that conversation. There's a lot of families out there who even talk to me and they go, I know my mom's got money because of our situation. I'm driving mom to the bank. She asked me for rides. I know that she has money. I know where she keeps it and all that. She still won't tell me.
It's crazy.
So I'm trying to be prepped for the fact that
we got to do an episode here coming up about getting together for the holidays and what questions to ask, the way to set it up.
Now we're doing that.
Messages to send.
So
because,
we're doing it.
Some of these people need help.
Yeah.
And it's when we talked earlier in the episode about financial family reunions, there's two folks that I'm working with that are really trying to put it together over the holidays. Have asked for email messaging, asked for banners or flyers so they can send to people because they're really trying to everyone's going to be here and I want to talk to them. Will you help? And so if that's you out there and that's something that you're interested in, just reach out. We'd be more than happy to do it with you. So
now we must say that not everybody is prepped to actually start buying life insurance at 65.
Yep.
Your income may not allow you to do so because of the premium levels that are required, depending on what type of policy you're trying to get.
Right.
Now, we're, of course, over here going to help you understand how to make sure it's permanent. We're not getting term at this point, and we don't want the cost to rise on us like universal. And that may be cost prohibitive to you. Secondly, your health may be already bad, and it's just not something you can pull off.
That's right.
So we understand that. But that doesn't mean you shouldn't be utilizing the tool and putting the policies on other family members. You may have the funds, but you don't have the knees and the back and the sugar's going crazy. So you still want to do this process by asking questions about how can I fulfill the dreams of legacy, of liquidity, and leverage, but the policy isn't on me. It's on she or it's on somebody in the we.
That's it.
There you go.
So I think after you've spent decades and decades building a life a legacy, a financial foundation for yourself, you've got to consider life insurance. And especially if you do it right, life insurance isn't about fear. It's actually about finishing strong. And whether you're trying to protect your spouse, whether you're trying to create a tax-free legacy we talked about, whether you're just trying to buy some peace of mind, the right policy at the right time can still be one of the most powerful moves that you can make in retirement. So I think if you want help figuring out your life insurance and if it still makes sense for you, if you should consider it, how you should use it, you've got to click the link in the description of this video. If you're listening to this episode on your favorite podcast listening app, it is in the show notes. You should click the link. That will allow you to book a call on one of our schedules. Mine, maybe Jeremiah's, maybe mine. It doesn't matter. And when you talk to us, we'll walk you through it. We'll give you clarity. We'll not pressure you into something, but we'll talk and walk you through your situation so you can make sure that you make the best financial decision for you. And it's not just us saying it. It also came from CBS News.
All right, ladies and gentlemen, happy holidays to you. Hopefully those financial family reunions are going to be great.
You are now tuned to the banking bros. Said we couldn't make it, drink or settle, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.
You may be 65, but ladies and gents, you're still alive. It's about time to sit down and talk and walk through your financial review. From us to you is something you can do over the holidays. Let's not waste time.